All right, everybody, what's up? Welcome to today's episode of the Indy Investor Pod. We've got a really special episode today. We're going to do an insurance deep dive with the king of insurance, Mr. Ted King. Man, how you doing?
I'm doing well. Hope you are.
Yeah, it's warming up here in Indy, so I can't complain. It's funny I call you the king of insurance because not only is your last name King, but you're kind of well known here, at least around the Indy Investor Group as being the go-to guy for insurance. So I know insurance is a topic that, at least for myself, it's nothing that really kind of I gravitate towards. It's nothing that kind of excites me. So it's often overlooked maybe by some other investors as a key thing to make sure you have in your arsenal when looking for investment properties and making sure you're covered. So, I know I'm going to take away just a lot from this episode today. I'm sure a lot of our listeners will as well. But anything you kind of wanted to say before we get started?
Yeah, I totally get it. Insurance is not fun or exciting or any of those things. I hear that all the time, but you spend all your time, energy, effort on getting your deal ready and done, and then the bad thing happens, and
Mhm.
that saves your pocketbook is your insurance. And so it's not something to overlook for sure.
Yeah, right on. So real quick, before we get into the meat of the show today, um, tell us who you're with, kind of what's your background with insurance, and we'll just go from there.
Yeah, I've been in the insurance game for about 5 years now. I own my own brokerage with Goosehead Insurance. It's a national brokerage. We're in 47 states. So anywhere that an investor wants to buy properties, we can insure it as long as it's not North and South Dakota. But I think that's coming. We'll have licenses there
Right on.
soon too. So yeah, as a broker, all that simply means is I don't work for one insurance company or another. I have access to about 45 companies. And so it's a huge platform where I just get to go shopping for people. And when you have that many companies, it allows us to handle whatever kind of needs someone might have. So whether they're buying one that they just want to rehab and flip, or it's going to be a long-term buy and hold, or multifamily apartment complexes, flood zones, it doesn't matter. We can handle it. And Goosehead did that on purpose. So we were started by Mark and Robin Jones out of Dallas, Texas, who are investors. And they had the worst time getting insurance. He worked over at Bain Capital, and he left a fantastic job. And all his friends were like, "What are you doing to go start an insurance company? That sounds stupid." And he left a fantastic job and said, "There's got to be a better way." And then I think 21, 22 years later, we're publicly traded on the stock market. We're fastest growing insurance company and a personal lines distributor in the nation. And our stock's doing pretty good too.
Yeah, no, that's great, man. So, I didn't know you were connected to that many companies. That's awesome. So, like, if I was going out and looking for insurance for one of my rentals, and I was like, hey, like, let me just talk to this Allstate agent. Like, how much of a difference is that talking to them than you?
Yeah, so he has one chance, right? If
Mhm.
Allstate happens to like your risk, then he gives you that rate. And if he doesn't, then it's a terrible rate. And I have 45 chances to find something that's going to be.
Is it pretty quick to like how? What's the
Yeah,
turnaround time to
yeah.
someone?
So Goosehead has invested millions and millions in technology. We partner with Salesforce right here out of Indy, and they've customized a platform that on a rental property, if you've got the information I need, you can call me in 20 minutes. We're done.
Okay.
Shop all the companies, have the rates back. As long as you've got some of the
That
basic
might be that might
information
be
that I
that
need.
might be quicker. 20 minutes might be quicker than just going straight to the big box companies, right?
Yeah, yeah, absolutely.
Yeah, that's awesome. So new investor, experienced investor, whoever it may be, when someone's coming to you to shop for insurance, I guess what's that first step they should take, and what kind of stuff do they need for you when starting that up with you?
Yeah, yeah, absolutely. So I like to always start off, and I get a lot of first time investors. I mean, I probably insured in the last year 100 to 150 out-of-state investors, along with another 50 to 75 maybe in-state investors. So it's
Wow.
become a big part of my business. And the first thing they always start, they want to get to the numbers and the quotes, but I always want to know what they want to do.
Yeah.
The goal, what's the purpose? What's 10 years from now, what is this going to look like for you? What are you trying to accomplish? Because that actually will change how we do the insurance. Because if you're just trying to have a couple of doors, then we're probably going to write the insurance one way. And if you're trying to get to 50 doors, then it's gonna look different, and we need to actually build a roadmap for that.
Yeah.
So after 1 or 2 doors, it looks this way, and from 3 to 10, it looks like this, and 10 plus, it looks a different way. And so to even build the roadmap of, we're going to grow with you, and we're going to think strategically with you through that. And we'll have conversations about LLCs or not LLCs or trusts or, all those other things. But usually the beginning part is, what do you want to do? Where are we going with this? And then once we have the goal in mind, then we'll get down into, names and addresses and all that kind of stuff, and details on the home with the ages of roof and plumbing and electrical and all that kind of stuff. But that's I always like to start with, what are we trying to accomplish here?
Yeah. And I'm assuming it's a pretty easy shift. Like if someone said, "Oh, I just want like 1 or 2 rental properties," and then they get they get bit by the bug, right? And then they're like, I want to, really scale this up. I'm assuming it's a pretty smooth transition for you on your end. It's like, hey, okay, well, hey, we need to change this. Right? Am I right about that?
Absolutely, yeah. So we actually already have a lot of systems in place for that. So there's certain thresholds where we've done the math, for instance.
Okay.
Uh,
So someone coming to you brand new, it's okay to say, hey, like, I just want to just take care of this one property. This is what I'm dealing with for now. We'll deal with the stuff later if we get there.
Yeah, and that happens all the time because I'm an investor as well. I picked up a duplex last year, and I sort of have the bug now. And this year, I'd love to maybe grab another one or two. And I mean, I don't have goals currently to go more than 3, 4, 5 doors.
Yeah.
But you never know, right? Like, it happens. People start off with 1 or 2, and you talk to them 3 years later, and they've got 25, and they're kind of scratching their head. Intended to get there, but they just did. And so we work with brand new, Ted, I have no idea what I'm doing. Help me. To one guy's got 150 doors at this point, and we take care of them. So anything and everything in between is fine for us.
Yeah, that's great. So when people are shopping for a policy on insurance, and maybe they're not going through you, maybe they're going to a couple, 3 or 4 different companies, not using a broker. What are the main things they should be looking for on their quotes from those insurance companies that says, hey, like, this is a better deal than this one? Or, if is there any kind of like fine print items where like, hey, you should really keep an eye on that?
Yeah, absolutely. So there's 2 main types of policies when it comes to rentals. You have sort of your traditional replacement cost. It means the property is in good shape. It's been rehabbed. It's tenant occupied. It's going to be your long-term buy and holds, and those are pretty straightforward, right? You want to have enough money in the dwelling amount coverage that if the really bad thing happens, it burns down, a tornado gets it, that you can rebuild it. Sort of a price per square foot, right?
Mm-hmm.
Indy, I certainly wouldn't go under $100 a square foot, and then you have to factor in other things if it's brick or hardwoods or a duplex or a triplex with multiple kitchens or whatever, right? But you just do the math, that way. That part's pretty simple. The other one that's a little bit harder to understand is the actual cash value policies. So these are going to be your vacant, rehab, flip, or even ones that maybe someone buys and just holds for a bit, and they're waiting to see if they can get a better offer on it. A lot of you can't get replacement cost on those. You have to get actual cash value. So it's there more to protect your investment, and the way they would pay out on those claims. And it's really important when you look at your policies, because the quotes won't just say replacement cost or actual cash value. Sometimes they'll say dwelling special versus dwelling basic. or named perils versus all perils. Or sometimes it will say replacement cost or actual cash value, but you have these different verbiages that you sort of have to look out for and know what they mean. And if you're not sure what they mean, you should ask the insurance person that's doing the quote. And the easiest way to understand is always the roof. So that's the example. Usually when I'm explaining an insurance policy to someone, you could ask your insurance person, hey, storm comes by and blows my roof off. Do I get a new roof? Or because it's a 30-year shingle and we're 15 years in, am I going to get half of the value of a new roof? And that'll tell you right there if you've got a replacement cost, you get a new roof, or actual cash value because it's 15 years old, it's depreciated, you get half the cost of a new roof.
Yeah.
That's an easy question to ask to understand what kind of policy you have or that you're being quoted on.
That's always kind of my style too. Just not even with insurance, just with everything. I'm like, hey, what if this happens? Am I covered? If the answer is yes, I'm like, all right, we're good to go. If it's no, I'm like, okay, why not? And how do we get that coverage? So
yeah, so the actual cash value policies typically only cover named perils. That's like 8 things. The biggest one in Indy that I think you would encounter is typically going to be a burst pipe, especially this time of year.
Yeah.
You don't want to tell your contractor to save you a few bucks and turn the heat off on the weekend, like leave the heat on. But most of the other things like wind and hail and theft and vandalism and lightning would all be covered. Again, it's just going to cover your investment more than replacing, the actual structure. They're not meant to be long-term policies, really. Once you get eligible for a replacement cost policy, you want it. It covers more and it's cheaper. These actual cash value policies are typically considered high risk, and so they're more expensive. So
okay.
that, if you buy a distressed property, you buy it for 50,000, you're going to put 50,000 in it. We insure it for 100,000 to protect your investment, and you're going to do your rehab for 3 months and then get a tenant in. Well, after the 3-month rehab, when you're getting your tenant in, you want to get rid of that actual cash value policy and replace it with a replacement cost policy for sure, because it's going to be cheaper and it's much better coverage.
Okay. So if I'm buying a house, then I need to renovate it to get a tenant in there. When I buy it to renovate it, you're saying you get the actual cash value and then switch to the replacement cost after it's done.
Yeah, you have to, because insurance companies will typically give you 30 days. They call it unoccupied. And you can go in and there's an understanding that you get to do some painting and flooring and things like that, right? But when you start messing with plumbing, electrical, roofs, foundation, moving walls, then it really gets more into a builder's risk / actual cash value policy. And it's not eligible for a replacement cost policy. So if you had something bad happen and an adjuster shows up and he's like, man, when did you buy this? And you're like, 2 months. Like, I don't see a tenant. And you're like, yeah, we don't have, they may not cover it. So having the right type of policy to make sure that you're covered is important. I can't tell you the number of times I meet an investor who has a 3-month rehab project ready, and they show me a quote from like an Allstate or a State Farm or something that's really a replacement cost, and they go, look, I can, this is $700 a year, and you're telling me your actual cash value policy is double. Like, I'm not paying that. But they don't understand that insurance company doesn't actually do that type of insurance. It would be like getting a renter's insurance policy for your primary home. Like,
Gotcha.
I know it's paper, but it doesn't actually cover what you're doing.
Yeah, that makes sense. That's actually a good tip. So I made sure I'd star that one. So that kind of leads into like the cost of when someone's getting insurance. Like, what are the typical costs? Specifically when they're getting insurance for an investment property. What kind of costs are we looking at?
Yeah. So why don't we start with the actual cash value side? It has very little to do with the house itself and more about the money. So if you're buying a $50,000 house with $50,000 worth of rehab, we're insuring it for $100,000. Yes, maybe that zip code has had some more break-ins, or that potential property has had, a fire in the past, and that can make your rate go up, right? But you won't know that till you run the quotes. But typically, that policy is going to be $1,300, $1,500, $1,600 a year, and then you're going to keep it for 3 months. So you're going to pay $600 to protect your $100,000 investment, which is cheap compared to what what it could be. And then you're going to get rid of it and you're going to get into the replacement cost, right? So the replacement cost in Indy, you have sort of 1,000 square foot single family home, vinyl, 2-in-1, 3-in-1.5, something like that. Depending on your deductible and the age of roof, those are your big price variables there. So the newer the roof, the cheaper your insurance is. The older the roof, the more expensive it is. The lower the deductible, the more expensive the policy, the higher the deductible, the cheaper. But I typically tell investors, if you're going to buy a single family, 1,000 square foot, $600 to $800 is somewhere in there. As long as it hasn't had a huge claim before, you don't have multiple claims on your personal. And we'll talk about that in a minute, how claims affect all of those things. And then a duplex, I typically tell investors that, again, if it's 700 or 800 square feet aside, you're going to be 800 to 1,000, somewhere in there, again, depending on deductible and things like that. Now, if you go buy a duplex that's 1,600 square feet aside and it's 3,200 square feet, then no, it's not gonna be 800 to 1,000. It's gonna be more, because the rebuild cost, right? It's really priced per square foot, right?
Yeah.
And then a triplex, I would budget 12 to 1,400, and a quadruplex probably 15 to 18. I had a lady come to me recently with a quadruplex, and she told me she had a quote from a standalone company for about 5,000. I was like, man, that seems high. Well, when I looked at it, the quad was about 5,000 square feet.
Mm.
The cost was like 650,000. And yes, we found something for like 3,000, so we still saved her a couple $1,000, but it was outside of the numbers I was just giving you because of how big it was.
Yeah, well, that's good to know. So you mentioned deductible in there. So, what kind of deductible should an investor choose?
Yeah. So one of the conversations that I have with investors, because of my personal experience in finally owning a rental, I think having a rental has made me a better insurance person. So rewind back to February of 20, I'm tagged in a Facebook post in one of the investment communities that I didn't even know exist. Somebody was needing insurance, and a loan officer that I work with tagged me. I did a good job for this guy. He puts a nice post, and then 4 more investors call, and then someone else puts a nice post, and then here we are today having the Zoom call with you. So I keep watching all these people from California and Texas and Florida and Indy buying all these houses here, and I'm scratching my head going, what's going on in Indy that I don't know about? And people are talking about how the market's great, and there's all these wonderful companies that'll help you find a house, and if you want to invest, like they'll hook you up. And I'm writing the insurance for this, and finally I stopped and had a few conversations with a few of the investors, and I thought, man, maybe I should pick up a rental. So I did, and in that process, something that sort of clicked for me, it was about claims. And the fact that in insurance, claims go with the address and the name on the policy. And so this is really big for investors, because you have to think about your insurance differently now when you become an investor. And I liken it to having if you've got 10 rental houses or want to have 10 rental houses, it's sort of like having a 10-car auto policy. Right, that thing's going to be expensive, right? If you have 10 cars on your auto insurance, and car number 2, you go to Kroger and you go to the grocery store, and there's a door ding, and it's $800 to get it fixed. You have a $500 deductible, so you turn it in and you get your $300, and your insurance next year goes up 20%. So your $3,000 a year car insurance goes to $3,600 for the next 5 years. So your $300 claim just turned into a $3,000 loss over time. And it actually works very similar with investment properties, because of the way the claims go with the address and the name on the policy. I recently ran some quotes for a very sweet lady. She had a couple of claims on her primary home. She was looking to get rentals here. And, of my 45 companies, because she'd had 4 claims in the last 3 years, she was ineligible with all but 3 or 4 of them. Now, I was still able to get her a policy, but she didn't understand how the claims followed her. because they're in her name. So in the beginning, I know that's a long story to get to the answer to your question, but in the beginning, you have to look at your cash flow to see what you can handle if the bad thing happens. So I can get behind your first couple and having $1,000 deductible, but after the first 2 or 3, you really need to consider going to a $2,500 deductible, because the math on the claim just simply won't make sense for you of what will happen. And if the goal, long term is to get to 10 or 20 or 30 doors, then, after 6 or 7 or 8, you're really going to have to consider taking a $5,000 deductible. And again, just because of how it's going to hurt you in the future and your finances. So the good news is it makes your insurance that much cheaper. And so there's a lot of guys that come to me with 5 or 6 doors, and they've got these $1,000 deductibles. We have this conversation. We up their deductibles to $2,500 or even $5,000, but now they're saving $1,000 or $1,500 a year on their insurance. So the properties are cash flowing better, and they're just taking that cash and setting it aside for little things, right? A small leak in a roof here that's $600. We're not turning that in on insurance. They're just going to pay it, but they've got this extra cash they're setting aside to take care of those things.
Okay. And then, so you already started talking about this with that story, but, LLC versus personal name. So clearly that makes a difference. Anything else you wanted to say about that?
Yeah. So some of what I'm going to say, I want to, some of it's out of my purview, right? So talk to a lawyer, talk to someone who knows about those things. But a lot of the investors that I work with, we have a discussion about personal name LLC, and does it provide some greater legal protection in case a bad thing happens and there's a lawsuit and the liability on the underlying policy is expired, so they go through $500,000 or $1 million worth of that, and then now they're suing you personally or suing your LLC. So I see a lot of people after 2 or 3 go get an LLC, except for our friends over in California that it's expensive for them to have their I think it's like $800 a year or something.
Yeah.
So many of them decide not to go that route or try to place it in another state, again, outside of my purview. But yeah, I mean, anything you can do to help protect your personal net worth, I think is good. And then some of my bigger clients who have 40 and 50 and 60 doors section off their portfolios, 4 to 6 doors per LLC, because in Indiana to have an LLC is not that expensive. And so for them to have 5 and sort of shelter each other from potential claims and rate increases, it just makes sense to do it that way.
Okay. And then if something does happen to one of my properties and I do have to file a claim, and it's an investment property, kind of walk me through how that process is going to go and what it should look like.
Yeah. So one of the things that you would need to ask that question of your insurance person. That's a big deal, because if they just say, well, we're just going to send you to claims, that's bad. So my process, you call me and say, hey, Ted, my tenant has said there's a wet spot on the ceiling, or the person that manages my property mentions that there's some damage. What should we do? Right? And I have a team of people that I work with and trust, or maybe they have a team of people that they work with and trust, but we always want to have someone that's a professional go out and look at it first. Because again, the nice lady that I was trying to help, and she's got 4 claims in the last 3 years, they were all like less than $1,000 payouts. So she saw a wet spot on the ceiling, just called in, they sent her right to claims, they put it through, and it was a very inexpensive thing. And if she would have known, she says, if I would have known now back then, I would have never have turned it in. I would have just painted my ceiling, or done something to dry it out, paid the $600 instead of turning in a claim because of what it's doing. So have someone come out first that you trust, a roofer, plumber, electrician, whoever, and assess the damage and the cost to get it fixed, so that then you can go back and say, based on my portfolio, if I turn this in, likely where my number is going to go, and let's just do the math. So it's more work for the insurance agent. It's easier to say, well, let's just send them the claims and then move on to your next thing. But your insurance agent that's when they should show up most, quite honestly, is in your claim, where they meet you in that time of need, and they help walk through the process, and having teams of people that they trust that can assess the damage, get some hard numbers, and do the math with you to see if it makes sense because of what it's going to do. It's very important.
Okay. Yeah, that's definitely some good advice there. And then kind of last thing I wanted to talk about, so I guess, so general liability insurance and umbrella liability, kind of explain the difference between those two. And then, um, kind of let us know, are they must-haves?
Yeah. So on your dwelling policy, when you get a rental property, there'll be general liability, or sometimes they call it premises liability. I would always take whatever that policy offers as the max. So I see a lot of quotes where they've offered 1,000 in medical and 100,000 in the liability, and to literally go to 5,000 in medical and $500,000 in liability. I mean, it's usually like $8 or $10 a year more for way more coverage. And so those two things help pay out for the medical expenses of people at the premises if they were to get hurt and somehow you're found liable for it. So the medical part is not subject to the deductible. So if they get a nail that works its way out of the floor and they cut their foot and need a couple of stitches, and with my people, there'll be $3,000 to $5,000 there. They can go get stitches, and you can turn that claim in, and you don't pay anything. But if they're hurt worse because the banister on the second floor gave way and they fell and broke a hip and surgery and 3 days in the hospital, well, usually $500,000 there in liability to pay those medical bills again so that you don't get sued. As your portfolio grows, you should consider getting an umbrella. An umbrella sits on top of the liability that's offered in the dwelling policy and will extend it from, say, $500,000 to by another $1,000,000, essentially giving you 1.5 million. And then the umbrella can go over top of all of your rental policies. So if you've got 7 or 8 doors, the umbrella can extend all of them to 1.5 million. So it's a nice way. It's actually a very cheap way to get that much extra coverage across the board. The problem typically with many companies is that to have an umbrella, you have to have some underlying qualifications, and just a standalone property usually doesn't fulfill it. Most companies want to have your primary home and auto insurance. I have a company that we use who will exclude. It's a true investor's umbrella. They'll exclude your auto insurance if you want. So you're like, Ted, I don't care about my auto insurance or having an umbrella for that. I really just want it for my rentals. And in that case, even some of my friends in California, they don't own a home, they rent. So as long as you've got a renter's insurance policy or primary home policy with the underlying $500,000 in liability, then we can get you an umbrella to cover up to 29 rentals on the personal line side without even having to move over to commercial insurance. And then if you outgrow that, then we're going into commercial insurance, and you would get a general liability policy it's meant for business, because at that point they would consider you a commercial investor, and it would act very much the same way. It would pay for medical expenses, legal fees, lawyer fees, and awardings from a settlement, that kind of thing.
Okay. Well, good stuff, man. We're kind of towards the end of the show for today. Went through a lot of good points. I took a lot of notes here on my end. Is there any kind of last words regarding insurance? Maybe it doesn't, but anything else you wanted to say before we kind of jump off here?
Yeah, I think the insurance market is so competitive, right? 1 out of every 5 commercials on TV is an insurance commercial. There's more money spent on insurance commercials than beer and gambling, and I mean, combined Pepsi, Coke, whatever combined, like insurance is by far. I mean, the top 2 largest companies spend over $1 billion a year a piece in advertising. So what I would tell you is, in such a highly competitive market, especially in the rental world, I mean, the rates don't swing wildly typically. You can find competitive rates with brokers for sure. I think you really have to get down and decide who do you want to work with. Who is you want to build the relationship with that is going to grow with you and think with you and plan with you to build whatever those hopes and dreams are of why you got into this in the beginning. Because whether you're paying 610 or 625 with one guy and $15 a year difference or something, you should know and like who you work with and build those teams, and then whoever it is, and then stick with them. I think that's such a big deal, that the investment and the relationship piece of this business is so important, because when the times of need come, you're not just another number, right? Like, they know you, they know your hopes, they know your dream, they know what you're trying to do. And I think that makes all the difference in the world.
Yeah, 100% agree with that last statement there. So, if anyone wants to get in touch with you, guys, what's the best way to connect with you if they have any other questions after this?
Yeah, absolutely. So my email is ted.king@goosehead.com. You can always call the office if you'd like. That's 317-343-4774. I'm not hard to find. You could Google and Facebook and all those kinds of good things. So yeah, if I could ever help, I'm happy to do it.
You should put your next business card, Ted. I'm just gonna throw this out there. You get like a crown on your head, like, since you are the king of insurance. So I'm just throwing that out there.
I
But
like it.
well, thanks for hopping on today, Ted. Great stuff as always. And with that ends today's episode of the Indy Investor Pod. Take care.
All right, we'll see you.